Breaking news out of Washington, where President Trump just revealed his nominee to be the next Federal Reserve Chairman. Jerome Powell's term expires in May. He faces ongoing attacks from the president, leading to fears that the Fed will no longer be independent under a new chairman. CBS News business analyst Jill Schlesinger is here to talk about it. Good morning, Jill. So who is the pick?
It's the big reveal. It's Kevin Warsh. He is a guy who has been a Fed institutionalist. He served on the Federal Reserve Board from 2006 to 2011. And that was, remember the time, during the financial crisis. At that time, it was very interesting. He was known to be a hawk. What does that mean? He likes interest rates high, which is contrary to what the president's talking about. He left his term 7 years early, and he was really in disagreement with the rest of the board. He thought interest rates were too low coming out of the financial crisis. Fast forward now, he is a guy who has been saying that interest rates must come down. He's pro-deregulation, he's pro-tariffs, and he has been very critical of the Fed's handling of that building renovation. That is what has triggered the Department of Justice's investigation into Jerome Powell and to the Fed itself.
So let's translate this for everyday Americans. What could this pick mean for the economy, given that the president wants lower interest rates? And what does it mean for the independence of the Fed?
Well, I mean, listen, for the independence of the Fed, we are not sure. Let's see what happens when he gets there. So I think reserve judgment. But what it means for the economy is that he is one of 7 votes that votes on interest rate policy. There has to be a majority. He can't unilaterally say, I'm the president's choice, rates are down. However, if he can corral the other Fed governors and push interest rates down, that would be great for borrowers, not so good for savers, but it also has a huge risk. It could trigger inflation. Now, to be clear, Warsh says he's not worried about inflation because he thinks it's temporary. He also thinks that AI productivity, like the machines helping us along, will help keep inflation down. Time will tell. But this guy is an institutionalist. He's well known in Washington. He is also known to be an operator.
All right, we'll see what happens. Jill, as always, thanks for the context. Appreciate it.
Sure.